Jim McCormick is with Allendale Incorporated. He's based in McHenry, Illinois, and Jim is one of our regular contributors. We're going to visit with Jim now about his thoughts on what the grain market is acting like here today on the first trading day of April and the first trading day of the second quarter of 2017, following the big USDA reports that came out on Friday. So let's go to the phones right now and find out what's on Jim's mind. So, all right, Jim, as you analyze the early action you've seen here in this new trading week here, following the rather bearish reports for the soybeans that came out on Friday, what do you think is happening?
I think, Merlin, what we're seeing is just liquidation. The funds are short corn, they're short wheat, but they're long beans, and that bean number we combine the acreage we got, bigger than a lot of people thought. The quarterly grain stocks bigger than we thought, and just private estimates coming out of Brazil putting that crop between 111 and 113 million metric tons. It looks like the funds just are running out of reasons to justify being long beans right now, and we're seeing pressure as they liquidate out to begin the quarter.
That seemed to be the overriding question after the reports came out Friday. Was that enough to flush out all of the market bears in the soybean trade? Apparently it wasn't, because today, as we look at prices right now on the soybeans, we are down 4 on the May contract at 942. So we're pushing that downward part of the envelope. Just one tick from our low of the day right now. We're 7 cents off our earlier high from last night. July down 4 1/4, and we have November new crop soybeans down 1 3/4 at 952 1/4. How much downside potential risk do you think there is here, Jim?
Well, I think in the old crop, I think 937 was the May fall low or winter low. I think they're going to try to test that, but I would guess somewhere between this $9.25 and $9 zone old crop and this $9.50 zone on the new crop. I do think you're going to find a little bit of support, plain and simple, because we got a long growing season ahead, and you're just going to get to the point where the sellers are just going to, I think, back off, even in South America, and wait and see what potentially could develop on a weather scare potential somewhere down the line. Now, not to be said, any big rallies, though, I think will be met by both producers selling in the U.S. and in South America.
Now, when you get these commitment of trader updates, as they call them, those are actually delayed by a few days, right? So there's a little bit of lag time. There may have been quite a bit of liquidation in the fund positions after the report last Friday, and we won't know for a little while.
Exactly. The commitment traders report are actually taken as of the close of Tuesday. So they'll take the trades positions as of the close tomorrow, then they release it after the close on Friday. But yeah, what they're kind of estimating, we get an estimate from the floor what they think happened. The commitment traders report had the funds long about 37,000 contracts going home last Tuesday. They believed after Friday's movement and everything, that position had fell to about 19,000 contracts. So they're looking for the funds to continue to shrink out of their position. Now, corn, on the other hand, they were short about 155,000 going home as of last Tuesday. The guess is they're closer to about 135,000 short coming into today. So we did see them lighten up their position after the position was actually position shot, I guess, was taken on Tuesday.
Right. Corn is higher once again today, so they're kind of doubling up on the gains that we saw after the report Friday. May corn now 6.5 higher at 370 3/4. It's still a penny from its high of the day, and December now up 6 at 394 1/4. And that's within a penny of its high of the day. On the wheat trade, very strong action in Chicago and Kansas City. May Chicago wheat 5.5 higher again at 432. July 5 1/4 higher. Kansas City May is now quoted at 423.5. That would be up 3. July 2.5 higher at 436 1/4. You mentioned the fact that the funds were so heavily net short in the wheat trade. We'll have to see if they can further bounce the wheat, even with all the rain going on in the plains here this week. Quick look at our cotton market will show that we have that July contract down 109 points right now at 77.50 in an abrupt about face there. It started out higher and sharply lower right now. Jim, I'll bring you back. We'll talk a little livestock trade here in just a moment. Our guest, Jim McCormick of Allendale Incorporated. We'll be right back. We're talking with Jim McCormick of Allendale Incorporated in McHenry, Illinois right now. And we're going to talk about the livestock trade. And Jim, I just got some new information here off of the press from USDA, and I wanted to relay that to our viewers and listeners. It's our wholesale beef cutout values in the midday update. And once again today, we have a lower trend Choice cuts are down 11 cents again this morning. Not a big drop, but it is lower. 214.01 is now the price per hundredweight. And for those of you that were tuned in earlier, you will remember that we had the select cuts over the weekend. Friday afternoon, they went down over $4 at that time. Well, this morning, the midday update shows them down $1.65 yet again. So they're priced at 202.35, widening out that spread even further between the choice cuts and select cuts. That spread is now $11.66 there. So this is a precipitous drop in the wholesale beef trade that we have seen in the last, 2 weeks or so now, right, Jim?
Yeah, it's been about 2 weeks since this thing's topped out, and plain and simple, the old line in the cattle industry goes up like an elevator and falls like an up fast, down fast, plain and simple, and that seems to be what's going on. I think the big thing is we pretty much I think the market's afraid they priced the beef out of the consumer's hands in a way, and they're going to shift their demand back to maybe pork and poultry, and now that price is trying to come back down to get consumers excited again, plain and simple.
So are there any lingering effects from that scandal in Brazil with the beef exporting out of Brazil and maybe the avian flu outbreaks, or are they just kind of side news stories that really don't have any impact on the meat, at least on the beef trade right now?
Right now, I don't think they have much impact at all. As it turns out, that Brazilian thing was a big scandal for about a week, but we really never saw a big uptick in demand for U.S. beef. As we tried to grab some Brazilian market share away, a lot of these countries that had banned the Brazilian beef are already starting to let the Brazilian beef right back into their markets. So it really didn't have much of an impact when it was all said and done.
So these instant scares that kind of became the norm here about 10 or 20 years ago, they don't seem to have that lingering effect like they used to. Interesting how they impact the market in the way that they do nowadays with instant communications all over. Let's take a look at the live cattle board and bring that up, and we'll get everybody updated on trade. Right now on the futures, a weaker tone. We have April live cattle bouncing around back and forth, either higher or lower, depending on what time of the day we're looking at it. Right now, April live cattle down 65 cents. We're at 119.30 per hundredweight, so now we're $1 off of our earlier high and getting closer to the lows within a dime. June now down 40 at 110.47. That's only a nickel from its low of the day now. August down 25 at 106.50. On the feeder cattle trade, remember we closed Friday well over $1 higher on the nearbys, and now we're well over $1 lower. We have April feeders down 123 at 132.72, and the May contract down $1.20 now at 131.50 after we got these new beef cutout value updates. What about the lean hog trade? Well, we also had new pork carcass cutout value updates as well, and they were 51 cents higher this morning on the midday update, so they're priced at 75.91. What is the lean hog futures trade doing? Well, as we take a look there, we have the April contract down 52 at 65.15, and the May down 35 at 69.50. That's 90 cents off its earlier highs, so a lower trend there too. Jim, thanks so much. Appreciate it. Jim McCormick of Allendale Incorporated in McHenry, Illinois. And there's all the latest info, Janet, for you.
All right. Thanks for a Monday full of information. Tell you.